Ma'am, admit all வேண்டாம் ma'am.
Okay, okay, okay. We'll start, ma'am. Silavarsi, ma'am.
Abita,
Yes, ma'am. A pleasant morning to everyone joined here for the second day of the 2 days international webinar on personal financial literacy, jointly organizing by Department of Commerce and Department of Accounting and Finance, Mahalashmi Women's College of Arts and Science. Before start the session, I request all the participants from various institutions nationally and internationally to follow the instructions. Kindly mute your audio, those who are joined through Zoom app. If you have any queries to ask, drop your queries into the chat box and all your queries will be answered by chief guest at the end of the session. Kindly avoid to post regarding the feedback link. We will share the feedback link at the end of the session. Each certificate will be given each certificate will be sent to a registered mail after submission of feedback. Kindly give your fullest cooperation till the session ends. Let's start this session with prayer song.
ஐந்து கரத்தனை ஆனை முகத்தனை இந்தில் இளம் பிறை பாலும் ஏற்றனை நந்தி மகத்தனை ஞானக் கொழுந்தினை புந்தியில் வைத்து அடி போற்றுகின்றேனே.
नमस्तेऽस्तु महामाये श्रीपीठे सुरपूजिते शङ्खचक्रगदाहस्ते महालक्ष्मी नमोऽस्तुते। नमस्ते गरुडारूढे कोलासुरभयङ्करी सर्वपापहरे देवी महालक्ष्मी नमोऽस्तुते। सर्वज्ञे सर्ववरदे सर्वदुष्टभयङ्करी सर्वदुःखहरे देवी महालक्ष्मी नमोऽस्तुते। सिद्धिबुद्धिप्रदे देवी मुक्तिमुक्तिप्रदायिनी मन्त्रमूर्ते सदा देवी महालक्ष्मी नमोऽस्तुते।
Now I call upon Ms. R. Sonia, student of Mahalashmi Women's College of Arts and Science, to propose welcome address and chief guest address.
Good morning, everyone. I extend a warm welcome to all on the second day of this webinar, Personal Financial Literacy. I welcome our principal, Dr. N. Buma ma'am, and I welcome Head of Department of Commerce, Mrs. G. Hemalata ma'am, and Head of Department of Accounting and Finance, Mrs. V. Kodanayagi ma'am, and I also welcome our faculty members and students to this auspicious webinar. Today we have our chief guest, Mr. K.Subramanian sir. He has experience working in National Bank of Fujairah and in global transaction services, and he also worked in government and large corporates Dubai in Northern Emirates as unit head. He worked in ACE Global Depository as chief executive officer. He also has experience working in Standard Chartered Bank and in commodity traders and agribusiness, UAE as segmented. He also worked in wholesale banking as director and senior relationship manager as an analyst in ANZ Greenlace. Sir has completed his MBA in the field of marketing and finance in XLRA Jamshedpur and bachelor's degree in mathematics in Loyola College. Today we are going to inculcate new things on personal financial literacy. I hope you all will enjoy this. Once again, I heartily welcome you all to this session, and I also welcome our national and international participants. Thank you.
Thank you, Ms. Sonia. Now I request eminent personality, chief guest of program, Mr. K. Subramanian sir, professional international banker from Dubai. to take over the session. Please, sir.
Yeah. Yeah, can you see it now?
Yes.
Yeah. Good morning, everyone. Today we are going to talk about personal financial awareness. What is personal financial awareness? It is not so sophisticated as the name sounds. It is about simply understanding how to manage money, how to manage your own money. You would have heard about fund managers, asset managers who manage others' money. But today we are going to talk about each one of us. How do we understand how to manage money? So why is it so important? Why should we talk about it, or why should we understand about it? It is not it's not a degree or a course that you would do in a college or a university to find a job or grow your career. It is something that you learn as part of your life skill. This is touching every aspect of our life. It will be useful for us in our day-to-day life. Whether you go out to buy your essential commodities like grocery, milk, you have to handle money in every aspect of life. Whether you are the head of the family or whether you are a member of the family, everybody handles money. So it is very important. It touches every aspect of our life. And whatever age you are, whether you are a child, whether you are an adult, whether you are an earning member of the family, or whether you are a retired person, it touches people from all ages. One important thing to note is nobody ever teaches you how to manage money. They teach you mathematics, they teach you English, they teach you science, they teach you simple interest and compound interest, but you never are taught how to manage money. So it is important that you have to learn this skill yourself. Like I can give an example here. I mean, nobody goes to a class to learn how to ride a bicycle, right? We all learn it ourselves with the help of our brothers, sisters, whatever. So it's like that. So you need to learn how to manage your money. What does it help us? It helps us make financial mistakes. We will be dealing with money all our life, and having some awareness about how to manage it will help us avoid financial mistakes. What do I mean by financial mistakes? Making an investment in a wrong place, making a wrong investment in an instrument which is not suitable for us, making right decisions. It also helps us deal with emergencies. We would all face several emergencies during the course of our life. It could be financial emergency, it could be medical emergency, it could be family emergency. So, it helps us deal with those emergencies effectively because we have planned and we are aware how to manage our monetary aspect of it. The other important reason why you should be aware is once you start working or let's say you're doing a business, every month you get your salary, right? You want to manage or be financially prepared so that you don't have to live from one salary waiting for the other salary. So that a well planned or well aware person would not worry whether the next salary comes in or not. He is well prepared. He is built his safety net so that he doesn't have to wait for the next salary. The last but not the least is money doesn't grow on trees. It is very limited. Either you get a salary or you make business. Everywhere it is limited. Nobody is going to come and give a free amount of money. So money is very limited. So we need to be careful how we handle things. I mean, we are aware how we manage water very judiciously at our homes. So some money is something similar to that. So it is very scarce. It is precious. So we need to manage it very carefully. What do we mean by personal financial awareness? What do we need to know as part of it? As part of awareness, we should know what our earnings are. We should understand what saving is. We should understand what investing is. We should understand how to spend it responsibly. We should understand how to borrow responsibly. We should also learn how to protect our assets. We would have saved money, we would have invested in different assets. It could be a house, it could be gold. we should know how to protect it. So these are the 6 important aspects of personal financial awareness. Now, how does one become financially aware? Always, there are 5 critical steps of how one can become financially aware. The first step is to actually make a budget. Suppose, let's say, for example, you get a salary of 25,000 rupees. Make a budget. How are you going to spend this? How are you going to save this? What is the amount you're going to spend? So we'll look at each of these steps in further detail. So you have to make a budget. Budget is nothing but a plan of how you are going to spend the money, how you are going to allocate it to different areas of expenditure. Second is framing goals. Your goals could be short term, like buying a laptop, buying a smartphone, or going for a vacation, or to join a course. So you have different goals. Similarly, there are long-term goals like buying a house, children education if you have children, even retirement. I know many of you are college students. So why is retirement relevant for you? It is relevant for you because the earlier you start saving money, you will have a very comfortable retirement. So it is very important that we think about retirement at a very young age. It is not something that only people in their 50s or late 50s should think about. By that time, you have very little time to plan these things, because retirement is a long-term goal. So you need to think about it. So the second important aspect of awareness, financial awareness, is framing proper goals. The third is understanding financial concepts. This is applicable both for people who are, who have a commerce background or accounting background, or even a science background. It is important that we should know what these concepts are. Things like inflation, taxation, compounding, investing. There are various financial concepts. So it is important that we learn how to understand these concepts. The fourth aspect is, what are the various types of investments or assets that one can invest their money in? You could either put your money in a small box and keep it aside and use it after 10 years. Will it have any value? It might not. So you need to understand where to invest so that your money grows and your money increases in value, or at least retains its value. And the last one is, learn to do simple tasks. When I say simple tasks, it's about going to a bank, opening an account for yourself, putting some money, transacting, withdrawing money, writing a checkbook, go to a post office, open an account. You can have a savings account in post office. I don't know how many people know actually that you can have a savings account in post office. You can even have a checkbook in post office. Not many people know about it. So people who don't live in major cities, who don't have access to bigger banks, can actually do everything in a post office. Similarly, there are investment schemes in post office which are as equal and comparable to bank. And in some cases, the interest rates and the returns are far better than what you would get from a bank deposit. So let's look at each of these 5 steps in more detail. What do I mean when I say making a budget? Making a budget is nothing but keeping a record of what you are earning, allocating amounts to different areas of spending, and also saving. So this is what a budget is. It's basically a record keeping. Accounting students will know how to write a ledger. So it's not very complicated. It could just be a simple notebook where you write, this is my salary, this is my earning, or this is my pocket money, this is what I'm going to spend this month, and this is the amount I'm going to save. So it's just about writing so that you make a plan. Now, when I talk about spending, there are 2 types of spending. One spending is mandatory and the other spending is discretionary. What do I mean by mandatory? Mandatory means you can't avoid these expenses. It is like buying grocery, buying vegetables, buying milk, paying your electricity bill, paying your rent, buying your train pass or bus pass. You can't avoid these things. So these are aspects, expenditure that you will have to do, and it is not in your control. The second is discretionary. Discretionary are expenses that you can avoid or not spend if you want to. This will include, going to a restaurant, watching a movie, buying some expensive phone, or going on a vacation. So these are things that you can postpone or decide whether you want to spend that money or not. Similarly, once you know what your mandatory and discretionary expenses are, allocate money for each category. If you have a salary of 25,000, you say, I'm going to pay a rent of 5,000 rupees. I'm going to spend 5,000 rupees on grocery, milk, vegetables. I'm going to spend 2,000 rupees on children education. So make allocation for each category. One thumb rule that we should follow is saving should always be minimum of 10 to 20% of your monthly earnings. So if you're getting a salary of 25,000, you should at least try and save 2,500 rupees a month. It is a basic thumb rule. That is when you will be able to invest it into suitable investments. The last important thing of making a budget is we always have face emergencies in life, whether it could be a financial emergency, family emergency. So it is always important that we set aside 6 months of expenses. So if your monthly expenses is around 10 to 15,000 rupees, you should always have an emergency fund of 90,000 rupees. And this 90,000 rupees should be set aside, easily accessible whenever you want to, and should not be spent or used for any other purpose. This is only in the case of an emergency. Let's say, for example, somebody has got a medical emergency in the family, you have to pay the doctor, you have to pay the hospital. That is when you should use this emergency fund. And once you've used it, once you are back to normal, when things have come back to normal, you refill this emergency fund and keep it back at 6-month expenses. You should not forget to do that. You should be disciplined to do that. So this is basically what making a budget is. The second important step in financial awareness is framing goals. Like I said, planning for a purchase. So if you want to buy a laptop, which is going to cost you 50,000 rupees, you might want to save 5,000 rupees every month, so that within 10 months, you've saved that money and you're able to buy a laptop. So if you're able to save only 2,500 rupees a month, then you will be able to buy a laptop only in 20 months. So planning for the purchase, that is a very important part of framing any goal. So there are two types of goals. One is the short-term goal and one is the long-term goal. As I explained earlier, buying a laptop, buying a smartphone, where the value is not very high, that is typically short-term, and short-term would typically mean anything between 3 to 12 months. Long-term is things which you are going to do in future, maybe 5 years down the line, 10 years down the line, like buying a house. If you have children, it is children's education, or if you have any retirement plans, if you're a middle-aged person, or even a young person, you could have plans for retirement. So you want to have a farmhouse or something, so you need to plan those things well in advance. So the long-term goals would typically be anything between 10 to 30 years. So it is important that you should think that far. Unfortunately, what happens is we don't plan for those long-term events when we are young. We start thinking about it only when we have reached 35 years or 40 years. So that's a mistake. Most of us do. I won't say all of us. I think that is something people who are in college, young adults, you should probably start thinking about this as well. It is never too early to start thinking about long-term plans. Even for your own higher education, some of you might want to go to universities abroad to study. You probably want to start saving for that now, or your parents will start saving for that now, because these are long-term goals and these values are high. These are not small amounts that you can pay with 3 months salary or 6 months salary. So you need to plan well in advance. How do I plan? There are a lot of, we have access to internet today. You go to the internet, you have a lot of online calculators. If you want to buy a house, you have mortgage calculators. If you want to take a loan, it will tell you how much installments you will have to pay. If you want to take a car loan, it will tell you how much down payment you have to make. how much monthly installments you will pay, what are the interest rate. So there are tools available online where you can actually use these calculators to plan your financial goals. The next step is learning concepts. There are a lot of courses you can attend a class. A lot of banks and financial institutions actually conduct workshops, courses. You can attend these workshops. There are a lot of material available online. In fact, I have prepared this presentation looking at material online, right? I understand some of these concepts. I knew these concepts, but a lot of these are available online. So anybody can read. You have to just make sure that you devote some time to learn these concepts. Like I mentioned earlier, learn concepts like inflation, taxation, and compounding. What is inflation? Inflation is nothing but the price rise of a particular item. Let's say, for example, if you had a car which you could have bought at 1 lakh rupees 10 years ago, the same car will cost you about 2,70,000 rupees. So why is the price increased now? It is because of inflation. Similarly, tax. You don't need to understand the tax law, which chartered accountants or people who aspire to be auditors want to understand, because they have to advise clients. But common people like us who are not tax experts, at least you should understand what is the implication of tax when you buy a house, or what is the implication of tax when your salary is above 2.5 lakh rupees. What are the instruments or savings instruments that will give you a benefit in terms of saving tax? So you need to at least understand the basics. And the last but not the least is compounding. We've all learned about simple interest and compound interest, right? So compound interest is interest on interest. So the earlier you invest for a longer period, the interest or the additional interest that you get on the principal amount accumulates over a period of time, and that grows your money. So you have to understand the concept of compounding. It is very important. That is what will help you grow your money and increase the value of your assets. The last one is invest in yourself. Investing in yourself is increasing your knowledge about financial instruments, increasing your knowledge. You don't need to be a technical expert. You need to at least understand. If, let's say, for example, some insurance agent comes to you and says, sir, please take ULIP insurance. You should understand what is ULIP insurance. It is unit linked insurance plan. So when somebody says a technical jargon, you should be able to understand. There are a lot of people we will encounter when we start working who will come and, somebody is selling you a credit card, somebody is selling you a car loan. They will always be coming and selling something to you. So you should invest in yourself to understand these concepts. The other important pillar of financial awareness is knowing what are the different types of assets. What are assets? Assets are something where your money is got value, and that helps you accumulate wealth over a period of time. People buy house, people buy gold, people put it in banks, people put it in bonds, people put it in shares, mutual funds. So there are multiple types of instruments that are available. So you need to understand what are the different types of assets that are available for you as a person. Maybe for people who are in, who are studying right now, maybe real estate might not be something that you want to look at. Maybe bank deposits, postal savings, shares, mutual funds. Understand what are these things. So understand how these instruments help you grow your wealth. And when you are saving, allocate money to each of these assets, but allocate them only after you understand in detail what these assets are, what each of these assets are. Unfortunately, sometimes what happens is, especially in the stock market, people allocate money without understanding what it does. There are a lot of volatility. So their neighbor has given a tip, or their friend has given a tip in WhatsApp. So I want to invest 10,000 rupees in a particular share. So people go and invest like that, but that doesn't really help. unless you really understand what is the underlying nature of the asset, how will it behave, how volatile it will be, what are the risks related to that instrument. For example, if you invest in a piece of land, will you be able to sell it quickly? Will you be able to sell it at the price you want? So you need to understand the different aspects of each asset and then make your investment. Learn and do simple tasks. You can do your own banking. Go to a bank, open an account, understand what is a credit card, understand what is a debit card. A credit card is like a loan. We should be very clear that if we have credit card bills, we have to pay those bills in full. If you only pay part amount of the credit card bill, the remaining amount that is left in the credit card as a balance will get, you will be charged interest. And the interest on credit card sometimes is as high as 2.5% per month. So if you don't pay your bills in full, you could be charged interest every month. Visit a post office, understand what are the different investments available within the post office. There is a monthly income savings, there is a recurring deposit, there is a PPF, there is fixed deposit, there is senior citizens deposit. So there are various avenues that are available within the post office to make investments. The third is, if let's say parents give you a gift, whether it is some shares, some mutual funds, or a piece of real estate. So understand what is the impact of that on your financial position. It is good that you're receiving a gift, but what is the tax implication? Or do you have to pay any tax? If you want to liquidate the asset, what is the process? So understand those things. And as I mentioned earlier, understand taxation. What is the tax implication of selling an asset? There are some assets, when you sell, you're supposed to deduct tax from what you get. There are some assets, when you dispose, the buyer will deduct tax. So you need to understand what these implications are. The last one is insurance. We all need to understand insurance. Insurance is a very important tool in finance. It could be health insurance, it could be life insurance. It should be treated like an expense. Insurance is not an investment. Generally, what happens is investment is always attached to an insurance and sold to us, saying there is a money back policy. You will get money every 5th year, every 10th year. But if you actually calculate the return based on inflation, the amount might be lower than a bank fixed deposit. So why are we going through all the pain of getting a policy, paying the premium and all that when the return is less? So we need to understand what is insurance. And typically when you take life insurance, one of the thumb rules you should follow is the amount of life insurance you should take is 10 times your annual salary. Suppose, let's say, for example, you get an annual salary of 10 lakh rupees. So you should at least have a insurance policy of 1 crore. The amount might sound very big, but if you approach insurance companies, the premium, this is pure term life insurance. You don't need to get complicated investment linked insurance. A pure term life insurance will not cost you so much. It will probably cost you 10,000-12,000 rupees for a policy of 1 crore. So understand insurance. It is very important because you need to protect yourself, because if you don't protect yourself, your earnings are not protected. So it is very important for that. This is also very important for your family members who are dependent on you. The other important aspect of personal finance is borrowing. What is borrowing? Taking a loan. It is very simple. If you borrow, you have to repay it. We don't have a choice. If we don't pay back, the bank is going to come after us and make sure that they recover the money, right? So we should always be aware of why we are taking a loan. So before we take a loan, we should ask some basic questions. What are those basic questions? The loan that you're taking should be for a specific purpose. It should not be generally, I should not take a loan to spend money somewhere. It is to buy something. So it could be a car, it could be a my degree, higher postgraduate degree. It could be buying a house, or it could be buying some important asset. So what am I buying the item? Do I actually need to buy this item? Before you take a loan, you should understand that. You should ask that question. And when you are taking any loan, new loan, always think about the loans that you've taken in the past. So you might have installments that you're paying already. The new loan might add to those installments. So how much extra will you be paying back to the banks? Whether your earnings can support that extra installments that you're going to pay. So all this needs to be considered. The last important aspect is, how certain is my salary? So let's say, for example, you're taking a loan for 10 years or 5 years. And if you're in a job, you want to make sure that you are able to keep your job during that 10 years or 5 years to make sure that you are able to pay your installments. So it is important that you understand the certainty of your earnings or your income before you actually take any loan. The last important aspect I wanted to touch upon in loans is credit cards. A credit card is a loan. It is not a plastic with some money kept inside that you go and buy clothes or buy books or buy things. But at the end of the 45-day or a 50-day cycle, you have to effectively repay that. As I mentioned earlier, if you do it partially, if you pay the bills partially, the remaining amount that is unpaid in the credit card is like a loan that is outstanding. You will get charged interest on that on a monthly basis. So if you read, if you people have credit card, read the fine print. It says interest of 2 to 2.5% per month. So 2 to 2.5% per month is somewhere between 24 and 30% per annum. So we need to understand that credit card is like a loan, and it is it carries interest. So we need to understand that. The last aspect of personal finance which I want to talk about is protecting the assets. You have earned, you have saved, you've invested. Now, how do you protect those assets? It could be using insurance. It could be, various aspects are there. So how do you protect it? First step is, before you make any investment, carefully review the investment. Carefully understand it. What are the risks? How volatile? Does it match your goals? Because every investment has an underlying goal. You framed your goals. So you should understand what those goals are being fulfilled by the investment. The second aspect of protecting your asset is to be very disciplined. So if you commit to making an investment on a monthly basis, you should make sure that you don't miss any installments, or you don't stop your investments. Because why do I say that? Because if you're doing monthly investment, you're actually doing rupee averaging cost. That means if an investment is worth 100 rupees today, it is 98 rupees tomorrow, you get the benefit. So when you do 2 months consecutively, you are paying an average price of 99 rupees for that investment. So this is why you should never be stopping your investments in between. If you have committed an investment for a particular period of time, you should continue that. So being disciplined in personal finance is very, very important. Also, you should regularly review your finances and your investments. So when I say finances, it is your income, expenses. So maybe you can review it once a year. Your investments can be reviewed every 6 months to see whether it is on track to achieve the goal that you had set out. Right? Because each goal you put a monetary value to it, and you want to achieve that amount during that time period of time. So it is very important to regularly review the finances, regularly review the investments. And while investing, you should never be emotional. One example is, oh, my friend has bought an apartment here, or my friend has bought an iPhone, so I also want to buy. Because your financial situation could be different from your friend. So you need to be careful. There is no point in getting emotional while investing. And the same way, you should also not get emotional while your goals are achieved. So if your financial goal has been achieved, you should not hold on to that investment any further. If it has fulfilled the goal, you should immediately liquidate the investment and realize the cash or realize the money, right? So it is very important that you should not get emotional while investing or even disposing of an investment. Similarly, the last important aspect of this is keep track of your goals. Compare the goals that have been set. Is the investment on track to achieve that? Is it fulfilling the goal? Is it not achieving the goal? Do you need to make a change? Keep reviewing this. So discipline and regular review is very, very important in understanding and protecting the wealth that you have created or the money that you have saved over a period of time. So that's all from presentation point of view. I am now open to taking questions.
Thank you so much, sir. It was much informative and useful for us to make our financial planning in a better way. Now it's time for question and answer section. So some of the participants from Mahalashmi Women's College of Arts and Science would like to ask some questions. Can I unmute them, sir?
Yeah, please go ahead.
Ms. Peta? Shweta, are you there?
Shweta, are you there?
Ma'am, if Shweta is not there, ask somebody else to ask the question, ma'am. Darshini is there. Sharmila is there.
Sharmila?
Ma'am, you want to unmute them?
Ms. Sharmila?
Darshini?
We have to unmute Shweta.
Yes, yes, ma'am.
Shweta is there.
Darshini unmuted, ma'am.
Yes, ma'am. I am
Yes.
Dashni from BCom A&F, sir. How important is inflation, sir?
Inflation is a very important concept. Like I said, 100 rupees 10 years ago will not have the same value today because there is inflation. And what is inflation? It is the rise of prices. So when you are making an investment or when you are managing your money, it should be sufficient to beat inflation. One good example is your bank interest rate on bank deposits, right? I don't know how many of you must have all been very young children. So there were time 7-8 years ago when bank deposits were giving 11%. Today, if you go to a bank, you will not get more than 5.5%. What is the reason for the rate to be reduced so much? Because the inflation has come down. So similarly, today, let's say if you are paying 2,000 rupees for a school fees per month, in 5 years time, it might be 3,500 rupees. So that is primarily due to inflation. So whenever you look at any particular instrument for an investment, you should always take into account the aspect of inflation because 2,000 rupees today is not the same as 3,500 rupees 5 years from now. So inflation is an important aspect.
Okay, so thank you so much, sir.
Sharmila? Sharmila?
Darshini, you can ask another question.
Yes, ma'am. How important is insurance, sir?
Insurance is very important. It is an important tool in the overall financial planning. You should insure your life. You should insure your health. I'm sure everybody was around during the 2015 floods. We all were affected in some way or the other. So if we had taken enough insurance, generally that is an area which we ignore as individuals. We think insurance is only for bike and car and for companies and factories, but insurance as individuals is important. So if during the floods, people who had taken home insurance or home content insurance, they could have gone to the insurance. Let's say if their fridge was damaged or if their sofa was damaged, they could have claimed under the flood insurance that they had taken. So it would give them protection. Otherwise, they have to spend from their own money and buy a new fridge or buy a new sofa or whatever things were damaged. They have to spend from their own money. So insurance is a very important tool. It is an expense. It should not be treated as an investment. Unfortunately, that is broadly the way it is understood, that it is an investment. It is not. It is an expense. It's like paying your electricity bill or mobile bill. So we should always keep insurance and investments separate. They should not be mixed together.
Oh, okay, sir, I understand.
Sir, we have some of the questions, sir.
Yeah, please go ahead.
How to improve our financial literacy, sir?
So I can give you multiple points. First is understand, what is investing, understand what are the different assets that are available, understand how to save for future, understand taxation, read lot of finance newspapers. There are a lot of them available on the internet. You can watch business channels. I'm not going to mention any names here, but you can watch a lot of business channels to understand. One good way to understand is read balance sheet of companies. I know the people in the Department of Accounting and Finance and Commerce will look at balance sheets of companies. Even common people can read those balance sheets. You will learn a lot of financial technical jargons when you read balance sheets. I studied math. I did not study BCom or accountancy, but now I can go through a balance sheet, understand the various reports written by the auditor, the comments made by the auditor, understand each balance sheet. So it is very important. Listen to some of the business programs that come on radio. Use online tools, maybe even join a club. Your college, you can start it's good if you can start a personal financial awareness club. So, students from other faculty can come and join, and the people who understand the concept can educate them. And last but not the least is to teach children. I remember opening a post office savings account when I was 8 years old. So it is important that we teach children at a very young age about finance and managing money. So these are the various ways that you can improve, one can improve financial literacy. And these are not only available in English, these are available in Tamil or whatever is your mother tongue is. So all this information is available on the internet.
Thank you, sir. Sir, we have some of the questions from the chat box.
Yeah, please.
The first question from the participant is, when we are assessing return on investment, dividend and rewards will be a profitable one, sir?
Yes, dividend is also taken into account as a return. So if you have a share, if you have 100 shares of a particular company, the company might declare dividends every quarter or every half year or every year. So that is the income that comes to you. Now, earlier, till the budget finance bill was passed this year, dividends were only taxed at the company level. It was not taxed at the individual level. But now they've abolished the corporate dividend tax, whereas now the dividend is taxable at the hand of the individual. So for example, if I have shares of a particular company and I am receiving dividends, it will be added to my annual income and get taxed at the current rate. So we should be aware of what is the tax implication of receiving dividends also.
Thank you, sir. Sir, one more question, sir.
Yeah, please.
Share some importance of having health insurance coverage during COVID-19, sir.
Okay, now it is a very interesting question. Till COVID came, nobody knew that health insurance does not cover such new diseases. And now the insurance regulatory authority has realized that our normal health insurance does not cover COVID. So they brought out a separate new policy that includes COVID. So today we get COVID, tomorrow, 10 years down the line, we might get some new disease. So we need to make sure that when we buy health insurance, it covers not only the current known ailments, but also future ailments. For example, there is something called critical illness policy. Critical illness means, it includes cancer, paralysis, terminal illness. We generally think that is not required, but it can happen to any of us, right? So it is always important to include those aspects when you take an insurance. So definitely, I think when you buy a health insurance, please ask a lot of questions. I know salespeople get irritated when you ask them a lot of questions, but it is important to protect, because you are the one who is going to pay the premium.
Thank you, sir. Shivaranjani ma'am, is there any question?
Yes. Yeah, yes, ma'am, I have, ma'am. Good afternoon, sir.
Good afternoon.
So my question is, how the middle class investor should get the knowledge about investing in shares?
Yeah. See, if you there are a lot of material available, magazines available about shares, about stock investing, how to go about stock investing. There are a lot of materials available online. You can buy magazines. You can actually join a course. There are institutions which actually run short-term courses for 2 months, 3 months to understand. So you can join one of the course and understand before you actually invest. So it's like joining, if somebody wants to learn tailoring or somebody wants to learn computer programming, it is similar to that. So it is another skill that you can acquire by learning. And I would say actually having a formal training is important before you start investing in shares.
Yeah. Sir, one more question, sir. What is mutual fund debt bonds?
Okay, so you used 4 words here: mutual funds, debt, and bonds, right? So mutual fund is basically a fund manager or an asset manager is gathering funds from different individuals, accumulating it, and then investing in shares. If to invest in shares, you need to have an account with you need to have a demat account, and you need to have an account with a broker or with one of the service providers. So common people might not be able to understand how to invest in shares. So for them, the best option is to invest in a mutual fund. Now you mentioned debt and bonds. So there are 2 things here. Basically, bonds is one way of borrowing. So effectively, when a government of India issues a bond or a company A issues a bond, they are actually taking a loan from you. You are actually giving a loan to the company, or you are giving to the loan to the government. So you need to understand whether that company or government has the ability to repay the bond. So bond will have a fixed maturity. Bond can have a fixed interest rate, or it can have a floating interest rate. So there are various aspects of bonds. Bond is nothing but you giving a loan to somebody. The last one, debt, is so there are, in mutual funds, there are different types of mutual funds. They are equity mutual funds, debt mutual funds. So again, debt mutual fund is nothing but you are giving a loan. You are giving a loan to the other person. So debt means loan, whether you are taking it or whether you are giving it. So that's the difference between these 3 that you mentioned.
Sir, one more question, sir.
Yeah.
Some of the families are depending upon only one person's income. How they can make a plan for savings for the future purpose?
Yeah. So like I said, the thumb rule should be that you should save at least 10 to 20% of your monthly salary. So if you're only one person earning income, set aside 20% of your monthly income and then spend the rest. You have to make a proper plan. So you can keep this 20% or 10%, whatever you are able to save, accumulate it over a period of 3 months, 6 months. Once you have accumulated a sizable amount of money, then you can look at what are the appropriate instruments for investing. It could be mutual funds, it could be shares, it could be real estate if you're going to buy a house for yourself. So it is proper planning, saving on a regular basis, being disciplined in accumulating that money over a period of time, and then investing it properly.
Thank you, sir.
Sir, we have some of the questions from the chat box, sir.
Yeah, please go ahead.
Some balance sheets do not represent true and fair view of the state of affairs. Then how to read and understand wisdomly for decision?
Okay. Now again, that is where you have to read the auditor's notes. The auditor's notes are very, very important, right? The auditor, if you have seen in corporate India, you have seen so many auditors being pulled up by the authorities for not representing true picture. So you can compare 2 years balance sheet, read them, and see if there are any disparities. read the auditor's note. The auditor's note will always say some contingent is not included, or some debtors which are not recoverable have not been recognized by the company. So you can read those things. It is more by practice and understanding how the auditors mention these notes in the balance sheet. So that will give you a more insightful view into the balance sheet. It is the responsibility of the regulator to ensure that the auditor mentions the correct information. If the auditor does not mention the correct information, he is going to be pulled up by the regulatory authority.
Sir?
Yeah, please.
Sir, one more question, sir.
Yeah.
Is it advisable to invest in SIP with a small amount now?
Yes, why not? So SIP means it is investing on a regular basis. It is called a standing instruction purchase. That means you don't have to give the instruction every month or every week. Why is it better than investing in a lump sum? So I will explain this with an example. Let's say, for example, today you are investing in a mutual fund which has a net asset value of 50 rupees. You invested 10,000 rupees. Tomorrow it goes down to 48 rupees. So you are already at a loss of 2 rupees per unit. Whereas if you are investing this 10,000 rupees over a period of 10 months at 1,000 rupees each, today you will buy it at 50. Next month you will buy it at 48. If it goes down further to 47, you will buy it at 47. So you get rupee cost averaging when you do SIP. So it is always advisable that you do an SIP rather than investing a lump sum. So it covers the volatility of the share.
Thank you, sir. Thank you so much, sir. Abhita?
Yes, ma'am. Thank you, sir. Now I call upon Ms. V. Rajalashmi, student of Mahalashmi Women's College of Arts and Science, to deliver vote of thanks. Over to you, Ms. Rajalashmi.
Rajalakshmi.
Yes, ma'am.
Okay.
Gratitude is a kind of attitude. And now it's time for thank everyone who made this session grateful. It's my great pleasure to thank our management for supporting us in conducting a webinar international level even during this lockdown period. I express my sincere gratitude to our most respected and beloved principal, Dr. N. Bhuma ma'am, for her continuous support in conducting this international webinar. Thank you, ma'am. Thank you for your continuous support throughout this program. Without chief guest, this webinar wouldn't be a meaningful one. On behalf of everyone, I express my special and sincere thanks to our chief guest, Mr. K.Subramanian sir, for accepting our invitation in conducting this international webinar, and our participants will be benefited more in terms of knowing personal financial management. Thank you, sir. Thank you so much, sir. It's my privilege to thank our department heads, Mrs. G. Hemalata ma'am, Department of Commerce, and Dr. V. Kodinayagi ma'am, Department of Accounting and Finance, who organized this program in a very good manner. Thank you, Hemalata ma'am, and thank you, Kodinayagi ma'am. I extend my thanks to our staff members from Department of Commerce and Department of Accounting and Finance. They jointly put their efforts in conducting this webinar in a successful way. Thank you all my staff members. Conducting online mode of webinar is all from technical side. I'd like to express my thanks to Mrs. Hamrin ma'am from Department of BCA and Mrs. Suganti ma'am from Department of in conducting the webinar. Thank you, Hamrin ma'am and Suganti ma'am. Thank you. Last but not least, finally, I thank all the participants from nationally and internationally who registered enthusiastically and attended this webinar. Especially, you all were well cooperated throughout this session. Thank you all, and thank you once again.
Thank you, Ms. Rajalashmi. Thank you everyone for made this session wonderful. I request all the participants complete the feedback form posted in the chat box to receive a certificate. Thank you once again all. Thank you so much for made this program a grand success. Thank you.